All right.
Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We had actually an extra long session today, daily brief, so we started this a bit later here today. Let's just make sure. Yeah, YouTube's working. Awesome. Where do you begin? Coronavirus, it's the end of the world. Here it is. I don't know whether I get too wrapped up in that. I mean, clearly, this is going to have an effect. Ironically enough, as traders, you want to properly position yourself. Um, I think there's a couple things going on, though, what I find interesting is we know that we're at the end of a very long economic expansion. Yield curve, we actually looked at yield curve today in the daily brief. It is looking very inverty. Bond prices are going crazy, yields are collapsing. The sort of general thesis that interest rates are rising, clearly that's wrong. Usually when the yield curve does invert, that's an excellent sort of confirmation that we are going into recession. But what I actually would say is that all the pieces for recession are already in place, and it was just really a question of we just have to find a reason. So it looks like this is the reason that they're going to use. I would caution people, of course, about getting too wrapped up in the short term over this and listening to sort of health organization people. I don't think that they're overly concerned about huge outbreaks in North America per se too much. Um, this go round, what I was actually hearing was that they're most concerned about what happens after the spring when sort of the first round of this virus dies off and then we get hit next winter. So I thought that was interesting also too with Jupiter Saturn cross next fall. Heightened fears. Excellent anecdote to get people to panic. Um, but I get the feeling that actually the capital markets themselves, they're actually, in my opinion, this is just Brian, crazy Brian, I think they're actually more driven by this event, in that Mr. Sanders is considered a very left-wing politician. And when actually you look at the S&P 500 chart, you actually notice that on the day that Mr. Trump won his election, there was some really insane price action on the S&P 500. And they left, of course, a big honking gap. And my hunch is that actually if Mr. Sanders is elected, I think, what do you think? Do you think the people like Goldman Sachs of the world have done well under Mr. Trump? And the market can very easily just go right back to its old sort of thinking of pre-Trump, and all that sort of fluff in the market is just taken back. I could very easily see that scenario. It's interesting too that is off of a about 2100 or so on the S&Ps. And we have a general rule that usually during recessions, the stock market loses about 50% of its value. So if you can think sort of along those lines, I actually like the idea of the S&Ps working their way up into maybe even coming. There's that gap from Trump. And if we understand the market loses 50% during recessions, and really, what that's sort of implying is probably some sort of crazy blow off top up here, right around 3,800, 4,000. So believe it or not, and I've sort of said this repeatedly over the past few months, is I actually expect this stock market to go through a blow off top into this election event window. Also, too, I was counseling people on the site. Remember January barometer? The first few days, and we looked at S&P 500 in particular, first few days was actually showed very, very down, choppy action. So in a weird sort of way, I had been counseling people that I expected some sort of market low end of the Ides of March, which would technically still be over here. Clearly they've left monstrous gaps. You can see when they leave gaps, usually they have to come back and fill them in. So, if you just look at this chart, there is this floor here, but I'm looking at this. Remember there was that gap there at about 3 and change. Kilo, a nice kilo. You can see we're going to make some sort of kilo in here. I do like this as sort of like a value window in the stock market. And we're not allowed to buy up markets. So up top here, we should have been like, yeah, I can't be a buyer here. I was really, really impressed. I think said recently, Julian's running a trading room on the site, and he had his whole gang short the stock market up through this, through put options. So way to go, Julian. Excellent stuff. Huge down day. But the interesting thing is, hopefully everybody looks at this picture and goes, well, we know institutions buy down markets. So where's the bottom of this market? Well, all they've done is they've just brought the market back down to the bottom of the range. So I don't know whether we really want to get too wrapped up in today's price action. Obviously, it's ugly. But as I sort of said before, and I kind of like this thinking now, you never know what the hell's going to happen in these elections. I mean, if somebody had asked whether Donald Trump was going to be elected, you know what the odds were there. Nobody thought that was going to happen. So could the socialists come charging back into power and sort of rewrite the rules of capitalism here? And all of this fluff of the Donald Trump presidency, which probably ends with some sort of horrendous blow off top, could it all be taken back? Sure. This is capitalism. And also to remember, we're at the end of a very, very, very long economic expansion. I mean, the economic expansion really starts way back here. Even if we do, like, I like the idea of the market just simply taking back the Trump event. And notice, just reload zones. If we do top at 4,000 or in that area, reload zones are basically going to be back against all these previous kilos. And I remember back in 2015, 2016, this, of course, is where crypto took off. But I remember we had just the hugest buy signal in the stock market. Our breadth indicators all just went absolutely insanely bullish right through here. So, interesting perspective on history. And, you look at the price chart, ironically enough, looking at that price chart, today's price action really isn't that big of a deal. But nonetheless, it is what it is. So, you turn on your screen this morning and you go, oh my God, the sky's falling. It's the end of the world. I mean, hopefully, I didn't have a trade set up on gold in particular, but I did have a nice little continuation trade set up that I took on gold stocks through here. So hopefully you were able to take advantage of it. And ironically enough, my bond trade's toast. But, you give back in the swings, you make up in the roundabouts. I can't remember how that goes. But did make some nice money on the gold trade here this morning. So, stocks, there is that break. Cute little M, like we said earlier. Julian, nice trade, dude. Way to go. Oil coming right back down to the bottom. But interesting, through this event with gold doing crazy blow-off tops and bonds, the oil has not broken its lows here from a couple weeks ago. And remember, we had kind of said when we look at oil, we actually wanted to see a W on the other side of trend line. So ironically enough, now we're probably making, if there's going to be a buy in oil, now would be the time to be really hunting for some sort of turn here. Good old Bitcoin, is it correlated with stocks and oil? It seems like it is a bit today. There are a lot of people saying totally uncorrelated. I'm feeling as though, Bitcoin's kind of looking heavy again. So I think it's moving in conjunction with these. And I noticed a lot of the cryptocurrencies are looking pretty heavy here this morning. So just looking quickly at your chart deck, what I thought was fascinating, I didn't mention this to you guys before, but if you actually go back, I did this through the daily brief today. If you go back on the US dollar index, you've probably heard me talk about gaps like to be filled in. And what was fascinating about this US dollar is technically you could make the argument there's still a gap from that level right there, and that's 99.84. Also keep in mind there's also a cheeky little gap way up here, but this was pretty wide, and you notice they took it in but didn't quite fill it in here. So this is one of these kind of levels where, look left. You've heard me say that before. You want to kind of, as price is moving up, and also remember there's also a gap right down here. You kind of want to look left and just say, okay, well, where could, where were previous bulls stopped, right? And is there any unfinished business? So, understanding this is a pretty big hole on the charts. They tried to fill it in. Somebody stepped up and stopped the bull run here. This is pretty important level here. So if we zoom out, and we'll minimize this one. Go see where that level happens to come in, and oh, gee whiz, look at that. That happens to be right there. So I think to a certain degree, this was actually a very long overdue gap fill event as well. So I didn't see that before, and my apologies, I didn't make reference to that for you guys here on the free video previously, but that's off of that gapping action. You can't even see it on the price chart here, right? So where are we? Yeah, I think I did that right. Yeah, so that hole there needed filling in, and that's basically what that event was right there. So, I basically have told people on the site today, what we really should do when we look at markets like this, if this thing really is a bull, where is sort of the natural sort of calm down level? And I'm kind of thinking right now it's sort of like this. 38.2s, old highs. There's a price gap right there. That looks to me to be the bottom end of the range for the time being, and we're sort of stuck in this range right here right now. I do like the idea of us working higher. I think somebody had said there's a point and figure objective up top here. I still think that's perfectly logical, realistic. I just think, on that gap fill event, we went and looked at some of the other currencies, and they were just sort of giving these things away. While we were megaphoning, very dangerous to try and take a trade. But notice, and this sort of caught our attention through the daily brief today. Notice that late last week, they actually started to W out. And it was interesting. We actually got a big algo Uber bull reading here on this event. Actually, the Uber bull reading came in here. So in essence, just take the first price structure signal that you see, which is that level there, when zooming up, back down. Now we're at new highs. I think this trade's just working away here. And 50% rule, and ironically enough, not even thinking about new highs and nowhere near. Just simply revisit of the January peaks. It's not that long ago. And that produces a 2.83 risk reward just taking that signal. So I think that trade is working away right now as the US dollar sort of cleans itself up, does a bit of backfilling. Remember we had said we come into chaos levels. What does chaos look like? All that kind of stuff. And then I think I've told you guys before, you can kind of see on the profile here, if we can get any sort of rally back into these original fail levels, that is a really great short location for me. So it makes sense that this market's probably going to take this move up and then maybe roll over and M out, and away we go to the downside again. So that's kind of what I'm seeing happening in currency land this morning here. Risk on, risk off. Like we said, risk on is coming off appreciably, but interesting how they're setting this up. So we had said just a moment ago, interested in oil through the middle of February, buy or unload in the middle of February, sell at the middle of May, make money. None of the past 10 years. We also said that we wanted to see a W on the other side of this trend line. And I think you can make the argument now, probably, the slick crude traders, I think they might actually be coming in on the buy side here. So if we go reload zone, oh, hello. So you can see that we're definitely in an area where if you were a professional trader and you wanted to take a shot against these lows, we're definitely coming into areas where they're going to be getting active. So keep that in mind. And also, too, look at the way that gold is acting. I mean, is it acting like it's at the end of its move or at the beginning of its move? To me, it feels like more endy. So I do like the idea, and actually the stock ideas that I wanted to talk to you guys about today are basically along these lines. So, today we are definitely in a risk-off kind of framework. Again, I think, believe it or not, a lot of this equity market weakness is just simply, gee whiz, are the socialists, maybe, have they got a chance to come back into power? And if they do I really, I'm facing this billionaire's tax that is going to be hit. Should I maybe take my money out of the market and get the fuck out of here so some socialist doesn't come along and just legally justify stealing my money? As I said, this was a bit of a shock to the market to see that Mr. Sanders has captured as much of the Democrat ticket as he has. And there was one political commentator commenting that it's over. Throw in the towel. This guy's won the nomination. Don't fight it. So if that's the case, then I actually could understand that over the weekend, people that have, $50 million worth of Amazon stock or whatever that they bought at like $500,000, 10, 15 years ago, they're like, you know what, maybe I better get my money the fuck out of here and just go park it in some sort of safe haven asset like Bitcoin. So Mr. Sanders can't get his dirty little hands on it. But that's what I'm thinking is actually the big driver here. But anyway, we'll see what happens. Risk off, just going crazy. And the key that we have to keep in mind here now, and we had a good conversation about this in the Daily Brief today, is what does the harbinger of recession look like? That's the yield curve. And is the yield curve back to inverted? And the scary thing is, I was actually a bit surprised to see this. The Fed actually better start taking rates down in a hurry here, or they're going to be left behind by the yield curve, which basically is going to imply recession. And also, too, obviously coronavirus, all that kind of stuff, economic activity. Do we have any worry about inflation right now? Nope. Deflation reigns supreme. We actually went to new lows here on the inflation-deflation gauge. So I don't have to worry about inflation right now. If anything, what we have to worry about is deflation. So, and the irony of it all, Fed comes out and says, okay, fine, we'll give you some more free candy. What do you think the stock market's going to do? My hunch is once we sort of shake off this short-term mania going on, the stock market's going to love that, and it's going to take off higher. But we'll see what happens. Only time will tell. Anyway, point of the matter here, bonds are screaming higher. They're actually breaking the new highs. We kind of talked to you about this recently. Sure looks to me like long-term interest rates are collapsing here, and our target should probably be about 120 on the long bond. So, I wouldn't suggest fighting this kind of market. I like the idea, of course, like I said, I bought a bond put, that would be an interest rate call, if you will. Expecting the market to move higher here. It clearly proved me wrong, so there's nothing really for me to do here right now. Just cool your jets. Interesting to see that gold's kind of calming down here a little bit because what I did do here today, and you guys all should probably be totally familiar with this, this was my gold stock proxy play, and I had explained in recent videos that really what I wanted to do was sort of break this into two to demonstrate how you can trade both of these bots off of just one position. So as you can see, we hit the short-term bot trade objective, and I actually got filled right up top here on the open this morning on half of the position. So profit is booked. Merry Christmas, way to go. And now off of the bigger bot, you can see the move stop to scratch levels hit. So its stop is sitting basically at my entry. So, I mean, can't complain. Profit is profit is profit. So I'm feeling pretty good about that trade. And if this lunacy insanity continues, all right, well, we've got another objective way up top here to spoon feed some more. I don't know, though. Notice, remember our talk about US dollar index and gaps. Notice, hello, there's a big gap right there. And that just so happens to be where we're stalling here today. So I don't know whether this thing's got any more legs. I mean, it's been a hell of a move. And what do you think? Half decent day, up another 8.5% on the day. Woohoo! So we bought it at 32, sold a whack of it at 42, I think, roughly. I mean, what the hell? Have I got anything to complain about? That's 35% return on my money. And now basically I'm sitting in a risk-free trade with whatever the hell the rest of the thing's going to do. So pretty good trade. Not bad. On the flip side, though, I am very interested in big oil names. And I think I've shown, and interesting enough, the oil names that I'm interested in, one of them's just I bought recently. It's just sitting right where I bought it. It's not doing anything. And the other one went zooming up away from my purchase price and is now only now just coming back down to my purchase price. So that's kind of like what Halliburton's doing here. I do like having, a nice spread of some big stocks, some medium stocks, some penny piece of craps. And this would be sort of my choice within the senior oil services sector. And you should look at this and go, well, gee whiz, that's a reload zone, and that's a key reversal, and there's a nice double bottom there, and there's a big weekly W there. So I guess it makes sense why that Beamish guy's in on the buy side here. And just FYI, I've got bids working at this gap right here. So I don't know. I still haven't gotten filled here yet, and I'm rooting for lower prices. I want the, kind of like what I did. I bought VIA on a stink bid against the bottom end of his range. I needed the crypto market to shit the bed to get a fill, and I got my fill. So that's sort of the same logic here. I needed the oil market to come back down to give me my fills down at my level. So I'm almost filled here, not quite. And I did sell a chunk of this gold proxy up top here. And I mean, just look at this chart. Is this thing got any chance of maybe calming down and coming back to fill in all these gaps? Of course. When you see this thing going up like this, right? You got to expect at some point it's going to come back down and clean itself up. So that's sort of what I'm thinking. Buy your unleaded middle of February, sell it the middle of May. Usually this gold market tops in January, but hell, if the top is February here, well, so be it. I'm not going to fight it. And I think gold itself, like we said, we kind of looked at the gold price itself. Do I have the gold? I got it up here somewhere. Over here. I don't know. Is that move kind of getting a little bit old? You tell me. So I think we had a big objective up here at 1703. We got one more. We got this top of this trend channel. Maybe those gold stocks pop up top, and hit that really aggressive big bot on this event here. Well, that could happen. I'm not really in a hurry either way. I've got my sell orders working up top on this thing, up at those bot objectives. I've got my buy orders working below at those objectives, and I'm just going to let my, work my order book. So, what am I doing in the stock market? I mean, there's some stocks we could talk about today, like this crazy one. Look at that insane-o nutso stock. I mean, if this is a bear, what the hell? Why is this thing going absolutely insane? 32% move on the day. Love this action. But, I can't talk about everything with you guys, but the one that I did want to talk to you guys about was how I'm thinking about lightening up on the gold and thinking about coming back in on the buy side on the oil. So, heading on over to the corn. Bitcoin took a bit of a punch in the nose last night. Through the weekend, and of course broiler chickens. We talked lots about this with you guys. Had a cute little setup come in off of this consolidation range that actually painted this target up in here. And I'd been talking about the market wanting to work its way up into these levels. And I thought maybe we could get one more push higher here. And I was out with my son just doing our weekend activity, so I wasn't around for this. But when I came back, I saw that, oh, no, they tried to break it out. See you later. The cool part about this is now actually I have structure. So on this short, if we go up through the W there, I'm just going to walk away because it probably tells me that the bear is done. Wicks and tails like to be eaten, so not a big surprise. They had to come back down. Left this monstrous tail last night. Looks like they're leaving a tail here this morning. So my hunch is there is a bit of buying pressure down in this area, so that's encouraging. But, as you can see, the short's still working. There's nothing really for me to do here right now. And I wouldn't be surprised, probably 50%. That was probably 50% retracement there. Probably going to be like 50% retracement in there. If we can actually start Wing out here, well, we can start getting bullish again. Problem is that if you look at the big boys, they all look very tired. So here's that daily chart on the cash market, looking very tired. And of course, this will create a nice little fractal if we go through these lows tomorrow. See you later. At the same time, too, though, those people coming in, buying against bottom end of range, we talked about that in Daily Brief. I could definitely understand why some guys would come in and risk against these lows. And just say, look, if they lose these lows, we'll just walk away. As I've said to you guys repeatedly recently, I do believe that we're stuck in a trading range. Rejection off of a test of the top end of the range. Testing the bottom end of the range. If we change this to like a line chart, you can see the very Emmy. We tried to W out here, but they went and blasted those lows. This can be really interesting close here today. See whether we close below these levels. So keep tuned. If the stock market and the whole sort of risk market can sort of firm up here, it's not the end of the world. We might hold these levels here. And as I said, if this does W out, I now have a very clear indication. We break through these highs, and I'm just going to walk away from the shorts. I had been sort of cautionary about things like Litecoin. Got rejected hard off that 78.6 overnight. We had talked yesterday about wicks and tails like to be eaten. This was a bit bothersome down in here. So, well, let's just let this thing sort of W out here. If this is trend continuation, we should see some half-decent structure come in to get us back in on the long side. But just sort of cooling jets. We had talked yesterday about Ethereum potentially breaking down, being the strongest of all of them. You notice the break here this morning. See that 13 EMA. It held as support again. So, again, and interesting, this was a new high here today. So at best, we're going to have to wait for tomorrow. See what it does, and then if that's an inside bar, then we go down. But for the time being, nothing's really changed here. So it's a big sort of hurry up and just cool your jets in crypto land. And of course, if you're hedgers, not a bad idea to have a little bit of short locked in up top there. Finish off this free video for you guys here today. I think I had shown you, I do like the idea of just going in and accumulating names. So here's one that I think's got a bit of room to run up. There is this funny little event right here that probably is going to sort of limit our price range for the time being. But this is like 120 sats. If I can get any kind of move up into 250, 300, I get myself a free trade. So is it worth me coming in and just doing a little bit of nibbling at the bottom end of the range here? You tell me. And of course, if I mention it here, probably odds are that's exactly what I did. If we look at the poop coin sort of space, we just made a new low here this morning, so I don't think there's any hurry here. But the good part about this is most of the fluff has been removed from the market, and I sort of drew these kind of levels out for you before. You want to be a little old lady, just force yourself. I'm not allowed to buy until we are at or below reload zones. So from that perspective, things are looking good. I think on balance, though, might be a good idea, especially considering this is a pure venture cap, most venture cap of venture cap, to maybe include 88.6 on your studies as well, because venture cap often does like to go all the way down to 88.6. And notice on an 88.6, that would give the market the opportunity to fill in all these gaps. And, again, if you think look left, where is support? Well, support is this low right there. Hey, that's the last time somebody said no more down, you go up. So we're coming into attractive areas. If you want to keep this nice and conservative, you can see how long it took for this W to come in. Right? How long was that? That was all the way to there. That was 19 days. So could we see that kind of duration to, I'm just assuming this is the low. I don't know where the low is. Can you be patient and disciplined and just wait for a bottom to actually form here? And it might take 2 or 3 weeks, something like that, right? That would be sort of what I'd like to see to know that, yep, the selling is done and it's time to start going back up. So, all right, and hopefully that gives you an idea of what I'm seeing in the market. Took a little bit of profit, so that's good. Thinking about coming in on the buy side and depressed assets. I like that. Still working shorts in the corn, accumulating altcoins at the bottom ends of their ranges, and not quite ready to get uber speculative on the altcoin space. Still think it needs some more time to clean itself up. All right, everybody, have yourselves a great day. All the best, and bye for now.